Good morning, everyone, and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin, and I'm here with my father, Carl Swenlin, and we are here to get you all set and started on the week. We're going to go through what our market indicators are saying to us right now. We will cover the sectors, and that will be followed by a little bit of some industry groups, as well as a stock or two if we have the time. And then also at the end of this, we will take your symbol requests. So please use the Q&A box for your symbol requests. The chat room is for you. You can get in there and chat amongst yourselves. Just make sure that when you're in the chat room and you leave a comment that you use the drop down above the comment to send it to everyone. Otherwise, it just goes to us and we do not monitor the chat box. That is completely yours. All right, I think with that, we'll go ahead and get started. What are you seeing in the market right now, Dad?
Okay, just a note when you, if you're having trouble with this recording and you're not seeing it's not very clear, try another browser. Found that that's an issue we should always bring up.
Yes.
Okay, we had a question. I want to address that on last week's show. One of our viewers asked, how do we determine overbought and oversold on the PMO? And he said he was using AMD as an example. So if you look here, and let me get my pointer going, looking here, this seems to be the overbought level in this time frame, and it really it's not like there is a set level for overbought or oversold. You look at what it's been doing, and in this case we've got a down market and a kind of a Weasley little rally here, and again it reached this level and it's turned over. Now, if you go out, let's see, we need to get the number of days out of years. Let's go out 5 years, and you can see that these recent levels of overbought are way lower than what we had in these previous years. The reason being, we have a rising trend. You have a rising trend here, and that's going to keep the indicator PMO towards the upper side of the zero line and get it to more extremes. So this, here you can see a really sharp parabolic rise, and it really brought it up pretty high, about to 15. Which is really high for the PMO. And otherwise, you've got these two weird points here. Otherwise, this seems to be right around here about 6 or 7 level, which is a reasonably overbought level. Anyway, it all depends. And it's not just the PMO. You can apply this rule to virtually any indicator. I can't think of any offhand that it wouldn't apply to. Our SPY chart showing current activity. We had a rising wedge going across this top here. Across this top, and now we've gotten it much tighter because it didn't reach the top of the range on the last short rally, and it's pulling back to the bottom. We expect a rising wedge to resolve to the downside. Doesn't mean everything's going to go in the ditch, but we expect it just to set a less steep rising trend, because this is the steepest line in the formation, and it is going to be the most likely one to fail. The dollar index, displayed under UUP, is in a downtrend. And today it's popping up a bit, and that's, of course, hurting the dollar. I'm sorry, the gold. Last weekend or last Friday, we did on our DPA, we covered the monthly chart. So I'm going to do monthly charts for a change here and see what that looks like. Okay, dollar index rising sharply and now breaking down from this parabolic advance. That is that the monthly PMO is decelerating, probably going to turn over. Gold, again, dollar's doing well, so gold is doing lousy. It's in a rising wedge formation and is likely to resolve downward. We would look for it to find support on this particular level, the level of that low between these two tops. Here we have the monthly chart of dollar gold. This is an end of day updating. So this is as of Friday. And here we have a cup or saucer with handle. This handle is getting kind of drug out, but basically is above this line of support again. So perhaps this is going to be the end of it, of any decline. You notice that here's the sentiment indicator. Notice how, okay, everybody was very happy. This is basically the premium being paid for the closed-end fund that holds the physical gold. And here they were paying almost 15% higher than what the actual price of gold was for this fund. But notice that the optimism held, and then finally they lost faith when it broke down in this area. And now we've been pretty much below the zero line and negative sentiment, and pretty heavy. This is the worst sentiment showing in the time period we have here. Okay, USO, crude oil. Looks like it started up today, but it's trying to break down.
Oh, that PMO top beneath the signal line, pretty ugly.
Yeah, that's not a good one. And then below the zero line too.
Yep, big bearish engulfing candlestick. Not liking the look of crude oil and energy right now.
Okay, here's the monthly chart. Notice that it has rallied from that low in 2020. It's up around 400% from that low. So on this scale, it doesn't look like that much, but it's quite a bit of movement. And again, the monthly PMO, it's a little bit, what do you call it? Well, it's running sideways. Let's just take a closer look on the thumbnail. It did top and then it bottomed and it's moving sideways. So I would say it's trying to top right in here, but it could easily, it's still above the signal line and it could easily start higher. Treasuries, we got a silver cross buy signal on Friday. The 20 EMA crossed up through the 50 EMA. Now, I don't specify that it's a 50-day EMA. Essentially, EMA would be it depends on the period that you're in. So I call it a 50 period EMA. And if you're on a daily chart, it's 50-day. If you're on a weekly chart, it's 50 weeks, etc. And Erin doesn't totally agree with me on this. But notice that the yield, of course, is going down as the prices go up here. Let's take a look at the monthly chart. A very sharp decline, bouncing off this level here. PMO is still heading down. Takes a lot longer on a monthly chart for it to move and to change directions. The 10-year Treasury losing some ground here. Potentially, it will continue down to this rising trend line, or maybe this support level here. But I don't have any reason to try to predict that at this point. If you look at the yield array here, you'll see that we get occasional pullbacks, but they're in a rising trend. This is the worst pullback yet, and you can see how they inverted here quite a bit. Let me add a couple years to this chart. That's a 5-year chart. Now, basically, this is all-time bottom here, I think, and we're headed higher. Bitcoin, we're in a range since November, and it's reached the top of that range, seems to be heading back down. Well, it's hit the top as of today, and it's near its low for the day. But let's go to the longer term chart. And this is where I believe we're headed, down into this area here. I don't know how low it might go. It could potentially go to zero, as we all know now. But it's in a downtrend. Everybody that's up here that bought up here is wondering if they should take their loss and get the heck out. There are still people who bought down in this area thinking maybe I should take my profits, and at least they have profits at this point.
Mm-hmm.
But they're no longer millionaires and billionaires. Let's go to our big tech stocks. Apple has reached this declining tops line, and this area resistance basically based on this top and this top. So it's kind of fuzzy. We do have what is looking like a bottoming action here. Amazon headed lower. Google in a rising trend from the November low. And obviously it's in a bear market. Meta platforms, rising trend. Microsoft, rising trend. Netflix, we can see it's rallied over 100% from the low here and last year. NVIDIA, rising trend, but we've got a rising wedge forming here, so it is probably going to break down out of that. Tesla still finding problems. Again, remember I showed a chart of Tesla and Bitcoin. They're very similar. And let's just see what we can do on let's look at 5 years. We're probably headed lower than this. Down. This is the basic pattern. That seems awfully low, but when you have these huge blasts upward and then a huge rounded top, it's definitely headed lower. I would look for here at least the first really good level of support that could possibly show up. Let me take a look at some of the indicators for the S&P 500. Notice we have negative divergence across these tops. We also have them across these tops. This top was not as high as this one, so potentially this is going to break down. Let's look at the monthly chart for the SPY. This is showing it's hit the declining tops line and is headed lower at this point. We had a little bit of deceleration last month, but now it's starting to accelerate. And let's go to the primary indicators. We have the Swenlin trading oscillator for breadth and volume. These are short-term indicators, and this is worrisome. I mean, it continues to drop off here while prices are going higher, although today we're getting a pullback. The ITBM, intermediate term breadth momentum and volume momentum indicators, volume has topped, and they are both overbought. And with this situation here, we're in a pretty dangerous condition. Let me look at a few of see if we got any questions. Other than, no, all we have are basically
symbol requests.
So I'll pass it to you.
Okay, sounds good. Let me share my screen. I'm going to go ahead and just jump right into the sectors so we can see what's going on there. I was reviewing them actually yesterday. I had to write a little bit later than normal. And I was noticing, I'm always on the lookout for new momentum. At this point, there is no new momentum, if you will. And in fact, when I look at all of these sectors, there are only 3 that I think have even the least bit of, positive look here. And those would be XLC of all things. But having looked at that meta chart and Netflix, it explains a lot, I think, on what's going on in this sector. But getting on the overbought side as far as the PMO, the other sector I'm liking would be consumer discretionary. And you can see that the PMO here is trying to get into positive territory. And finally, the one I think that looks probably the most healthy, no pun intended, would be healthcare, with 2 little bottoms above the signal line. Now, PMO is very overbought at this point, but I'm going to look at these 3 charts in more detail, and we can discuss that. But at this point, energy certainly looking the weakest after seeing that oil chart with that bearish engulfing candlestick topping PMO. I would say this is probably the least desirable sector to be involved with at this point. Big rounded top. I mean, it just looks like we're going to get the breakdown. There's discussion about Russian oil supplies re-entering some of the market. There's a lot of upheaval going on in there. So I would probably be avoiding the energy sector at this point. If you have to be in energy, I think coal still looks pretty good. But other than that, the rest of it is looking a little bit on the weak side. Financials, I did see we have a symbol request on financials, so I will cover that one as well. So we'll be looking at these 4 in more detail shortly. Industrials, I was really thinking we were going to get a nice, I think we're still in a good rally there, but you can tell even on this candle glance that is a rising wedge. But given the strength of the Dow of late, I was really expecting more out of this particular sector, but you can see it is turning over. We still have the buy signal on the PMO, but that looks like it's about ready to go away on us. Materials, with gold having a nice run, we did see a nice move for materials, but now gold is starting to top. And so this is becoming a little bit more shaky as far as a sector to be involved in. You can see another top on that PMO. Didn't turn out to be a problem last time, but we would look for that to fail here. It's definitely on the overbought side, and we have a rising wedge as well on materials. XLRE with mortgage rates falling a little bit. I was looking for some positive action out of real estate as well, but you can see that the PMO is trying to top again for a second time, still holding above these key moving averages of the 20 and 50-day EMAs, but overall still looking very weak. You can see technology hit the 200-day EMA is pulling back. The PMO isn't that overbought here in tech, but it does look like it's getting ready to top out on that PMO. I think that the fact that it got stuck here at the 200-day EMA would be a real problem for me. I don't think that this would be the place I would be looking at right now, particularly when we see a weak market. Technology tends to be the leader of where the market goes. And with the market starting to look a little weak, that suggests to me that technology internally is weak currently. And looking at that PMO, looking at that failure at the 200-day EMA, I can see why that would be the case. Utilities last week were really what I was looking at doing well. We did see a nice rally in utilities, but pulling back slightly. PMO is now topping. If we can get the utilities PMO to start turning right back up, the PMO is not overbought here for utilities. So you could see it move even higher. The problem is it's topping right now. And again, a lot of these have rising wedges, those bearish formations. So let's dive in a little bit more. I'm going to start with financials since that was a request. What we're going to look at here on our sector chart, obviously the key indicators that I use are the RSI, stochastics, and the PMO, along with the OBV. But when we do our sector charts, we have what we call under the hood indicators. So we can see a little bit more about what's going on within. So there are a few problems. At this point, you can see that the silver cross is topping. It doesn't have a negative crossover yet, but topping in overbought territory tells me that this sector is likely on the way down. We have a new PMO sell signal here. RSI is still positive, but probably won't be very soon. And you can see that while we do have some pretty good participation under the surface with stocks above their 20 and 50 and even their 200-day EMAs, I mean, that's a pretty good look, but they have been overbought for quite a while. And that is the condition we would be worried about. But really, the biggest problem with participation is the fact that the Silver Cross Index has topped on us. Notice also stochastics just falling out of the sky and relative strength looking terrible. So this is not a sector that I would be interested in. And you can see also today a drop beneath that 20-day EMA. I think financials are looking particularly weak. We might be fooled a little bit by that conclusion because we do have the golden cross that is about to come in today, likely will. And, you know, that obviously puts XLF in a more bullish configuration. But the problem is it is failing. I do see it failing beneath both of those moving averages, and that's going to pretty much take out that golden cross. So the other three, XLC, and again, I think this is due mostly to Netflix, its crazy rise and rally off of its lows. And we do see that the declining trend has been broken here. PMO is still moving upward, is not overbought just yet. Silver Cross still in a rising trend, and we're seeing the Golden Cross Index speeding up a bit. Also, really nice participation across the board. Has been somewhat overbought over the past few weeks, but still, I think this looks pretty good. Look at stochastics, a much better look, and obviously relative strength looking much better on XLC. I would just be really careful with this group. It is a more aggressive sector along with consumer discretionary, which we're going to look at now. So be careful with those. If the market is weak, these aggressive sectors usually lose favor. You can see a failed breakout from this intermediate term declining trend. Got the breakout, fake out breakout. 20-day EMA so far holding, but PMO, it's hard to tell here in the thumbnail, but it has flattened out. It is still rising, and it isn't overbought yet. So this was a sector that I was looking at yesterday as being, you know, probably a good place. But then you really, when you look at the price action being in this sideways trading range, failing to overcome that declining trend. I'm not thinking this is as good a sector as even XLC. Notice that we do see those stochastics topping at this point. So when we look at the three that we looked at, I would say that XLY and XLC still look fairly good.
Erin, before you get off this chart, I wanted to point out that on the price portion, you've got an October bottom and a November bottom. That's a double bottom there. And then the confirmation line would be drawn across those. You notice we've rallied twice to that line and turned back. And we're on our second try to get through it, and it's pulling back. So that's not really encouraging either.
No. And, all of these sectors, I think, are a little bit iffy, if you will, mainly because of those overbought PMOs. But yeah, if you look at this, seeing that price moving in a sideways trading channel, that's really not the kind of place I want to invest my money. I'm looking for things that are actually breaking out, and discretionary is definitely not one doing that. Now, healthcare, as I said, is the one that I like right now, and it really is a much better look than most of the others. It's been on a strong rising trend. It's overcome a long time ago. It overcame its declining trend in the intermediate term. You can see really nice participation. We're not getting any cracks just yet, still holding these overbought conditions. Stochastic still oscillating above 80. And look at the relative strength that's really been here since mid-November for the healthcare sector. Now, we are getting ready to top. We probably will, but we're getting ready to hit that April top. And I think that's going to be a place where healthcare is going to have a problem. It probably will turn down at that point. We'll really want to be paying attention to what's going on with the Silver Cross Index. Right now, it's accelerating higher, but it is very, very overbought. So it'll be interesting to see what this one looks like at the end of the day, Dad. But I have to say, of all the sectors, this one has kind of the most potential, I suppose, but very limited potential, because we are getting ready to hit that April top. And I think that's going to be very difficult for the sector to move past. All right, so really quickly, I'm going to go into a few industry groups that look kind of interesting right now to me. We talked a lot about comm services. Like I said, I think broadcasting and entertainment, looking at internet, these are kind of the places where we're getting some nice movement. Internet in particular, I do believe that would be Netflix is in there, but I could be wrong. But look at PMO is now in positive territory. It's not overbought. So I would say this is an industry group to watch. It's looking okay at this point. Publishing pulling back, mobile telecom actually losing some support at those 20 and 50, and look at that ugly PMO. So really, when you go within the comm services area, I would say that the best looking at this point would be the internet space. And really, that's it, because publishing looks like it's pulling back, and mobile telecom, again, looking pretty ugly there. We're going to skip discretionary. We talked about all the reasons why we don't like it, so I suspect that it's a waste of our time. Medical equipment and medical supplies are two areas that I've been watching closely. Both of them failing today pretty spectacularly, hitting 200-day EMAs and turning back down. We still have short-term rising trends that are intact right now, but we do need to be a little more careful about that industry group than I was thinking yesterday. Biotech's pulling back somewhat, but still in a nice rising trend. PMO, though, very, very overbought. This one has had relative strength. It's still holding relative strength, but I would be very careful with the biotechs. They tend to be kind of all over the place. Even when biotechs do well, you can get in one and it can just sail lower on you. So always be really careful in that biotech space. I always I know for me, I always like to have a stop in place. Pharma has been doing quite well, and we do see a breakout here for pharma. Strong stochastics. PMO is overbought, though, so we need to be very careful here. While it looks like we have more upside potential here in the market, the problem is everything is really overbought right now. And when we see some of these industry groups hitting 200-day EMA resistance and pulling back, that does really give me a sense anyway, Dad, that there are a lot of problems under the surface and the market is actually weaker than it may appear.
Right. I agree.
All right, let's dive in. Boy, we have 34 minutes to work on our symbol requests. I could actually dive into another group, but let's go into those symbol requests. It'll give me a bit of time to look at least 1 or 2 5-minute candlestick charts to give you a sense of how I use entries and exits with the 5-minute PMO and 5-minute RSI. So we'll go ahead and jump right into some of those requests.
C-Web.
By hot flash, I'm taking my jacket off.
CWEB.
Okay, C-Web. What do we got going there? Find the keys again. All right. Big bearish engulfing candlestick right now on the China internet. I can see what you like about it. Certainly a solid reverse head and shoulders. There's your left shoulder, head, and right shoulder. And the neckline is sort of down sloping neckline. So we did on that gap up get a confirmation of this reverse head and shoulders. And the height of the pattern, it certainly would suggest it could get back up here to those summer highs that we saw. But I would be careful here. That big bearish engulfing candlestick really suggests we're getting ready for a pullback here. This looks like watch list material to me because we do have that likely pullback in the shorter term. Certainly a silver cross, 20 over the 50 is encouraging. And you can see right here, let me get my inspect tool out so we can really check out this resistance level that was taken out last Friday. So, I mean, this still looks like we're going to get higher prices, but I would just say right now, it had a really forceful move to the upside. It's time for, even just a small pullback, which might offer a better entry here anyway. But be aware, the PMO is extraordinarily overbought right now. Let's go ahead and we will look at a longer term chart because we were talking about those.
It's a Chinese stock. And I know the political situation with China right now would not, make me want to invest in any Chinese stocks.
Yes. And this is a juiced fund for the China Internet Index. So be really careful here. You can see how overbought this PMO is. Even when you look back on history, this is definitely the top of its normal range. So it's looking ready for that pullback. So I would be very careful here with C-Web. I'm not going to look at a 5-minute chart. Actually, I will really quickly, because this one looks like if I owned it, I'd probably want to be taking a little bit of my profit off the table. So what I'd be coming to this 5-minute chart to do would be to sell it. How do we sell using a 5-minute PMO and RSI? Well, basically, when I come to sell something, I'm really only looking for that 5-minute PMO to be topping. Typically, that's going to be your best sell point. Obviously, Friday's strong rally, it kind of, had that big move, and then it just was really consolidating it. But even if you had taken some of that profit off that big move on Friday, this would have still been a pretty good exit point. You can see here we have the topping PMO again, which would have gotten you an exit probably right about this price level. And at this point, if I were looking at it and I was ready to sell, I'd have to come over here to the thumbnail, but you can see that PMO is still in decline, doesn't look like it's going to bottom. So this would be considered my sell point if I were at a 5-minute chart.
Okay, KHC.
Food products. Okay, so this is one of the few areas that have been that has been doing pretty well against the market. You can see that rising trend in relative strength. Certainly, it's doing well against the S&P, and it's also a strong performer within the group. So if you were looking for a food products stock, this is this is what you would want to find, is that relative strength within the group. You have a stock that is showing leadership. Stochastic still moving above 80. RSI was overbought, has pulled back into positive territory and not quite so overbought. Really nice breakout here. It does look ready to kind of pull back a little bit to the breakout point. It hasn't really done that too much. I guess it did back here. But this breakout was a little suspect on that filled black candlestick anyway. But I like the look of this. This is certainly, in my opinion, I would be holding this. But just be prepared for a small pullback, probably back to this level, about 2.5% pullback. If you don't own it, maybe you want to wait on it a little bit. We have to see what's going on in the market. And a small pullback to the support level with a bounce would make it a lot more, I can't think of the right word. It would make it more interesting for me as far as an entry.
Okay, CTLP.
All right, cantaloupe. Not one that I've heard about. Nice rounded bottom, and you can see the 50-day EMA seems to be the sticking point for this one. Currently, it is trading above that 50-day EMA. Stochastics have topped. So while the PMO does look pretty good, and while this is kind of a rounded bottom look, positive RSI, I am really suspect of this one, mainly because those stochastics have topped and are continuing lower despite 2 days of rally. That is usually the stochastics I love to put on my charts. The PMO is my favorite indicator, but stochastics is a really good way to get those early warnings that maybe the PMO is not going to pick up because it moves slower. It's a little bit more intermediate term. And stochastics and the RSI are very, very short term. So seeing stochastics topping like this, moving below that prior low, even while price is moving higher, to me, that is a sign that we might get a bit of a pullback here to this breakout point. But I don't like it not getting above the 50-day, excuse me, the 50-day EMA. I would be just a little suspect of this. But I have to say, I mean, when I do a diamond in the rough, this is kind of the chart that I'm looking for, is a PMO that is rising, not overbought. You can see the OBV has been confirming this particular rally, and relative strength is pretty good. The group is starting to see some relative strength here for computer hardware. I don't think this one looks bad by any stretch of the imagination. I would just be prepared for a small pullback, particularly because it's had such a big run today as well.
Let's see a weekly chart.
Yes, let's see the weekly chart. Everybody likes your opinion on those too. So
see, it's well, near all-time lows on that chart.
Yep, and coming out of them, weekly PMO is turning up. So for me, when the market is looking a little bit suspect, I'm not going to be entering stuff. I just am not. That's the way I operate. But if the market looked a little bit stronger, looked like it wasn't in the process of pulling back, this is exactly the kind of stock that I would be looking to enter. I just think you need to be very careful because the market overall is kind of due for a stronger pullback or correction.
Okay, FLR.
Lure. All right, nice breakout. And now we're getting that kind of mechanical pullback to the breakout point. Not a big surprise. I want to get a thumbnail on here because that PMO looks suspect to me. And I was right. Topping beneath the signal line. Now, it makes sense because this is a pretty strong pullback after that big old rally. But that is still a problem that we need to consider if we were going to enter this stock. Notice stochastics also getting close to 80 and then topping off a little bit here. Relative strength looking pretty good. But against the S&P today, this one is actually, underperforming what's going on. I do like, again, industrials I was really liking, but overall, I think we're in for a little bit more pullback. This is the big problem for me. I can't enter any stock where the PMO is pointed down. So I wouldn't be wanting to enter this. I think if I owned it, I would certainly hold it, probably tighten up my stop to about right in this middle ground here. Because if it fails here and it starts to travel into this particular congestion, I wouldn't want to own it past that. But this, it looked pretty good on the gap up and this breakout. I'm just suspect because of that PMO, the way it quickly has topped beneath its signal line. Look at it weekly here.
Are you going to do a weekly?
Yeah, let's look. So on a weekly basis, again, this looks pretty good because we have that bounce off of kind of a long-term support zone here. So in the intermediate term, if we can just get the market to, continue its way upward in the rally that we began, that would be great. I'm a little bit worried about it still. But I think that looking at it in an intermediate term picture, everything here looks pretty good for it. The big problem is the market in general. So this one is definitely would be on a watch list for me just to see if it can hold and make a turn to the upside after today's big decline.
Yeah, on the weekly, it was at the top of the rising trend channel. So yeah, it's probably going to be pulling back at least to the bottom of the channel.
Yep. So, yeah, I think we're going to be looking at that for most of the stocks, just because overall, we talked about the market. It's pulling back and it looks like it's going to break down from this rising trend. So we just need to be really careful because most of the stocks are going to follow it down.
XOM.
All right. We talked about oil and energy, and boy, Dad, what do you see on this chart?
Rounded top.
Big rounded top, holding support still, but it is trading really on that support line at 107.50.
Okay.
Yeah, and that PMO about as ugly as it can get. If you own this, this certainly with that rounded top, normally, if we maybe had a trading channel here and it was down low, it would be, okay, I could see holding it. Let's see if it'll rebound. But this rounded top, this PMO, the RSI getting negative, look at stochastics, relative strength. I just don't see it holding this support level. I think you're in for some more downside. Certainly not anything that I would be interested in taking a chance on, particularly now. If you're going to take a chance, we need to at least see charts, where they've broken out, maybe you're pulling back like we just saw, those are the kind of charts I would be putting on a watch list. This one, you can put it on the watch list, but I think you're going to watch it go further and further downward.
Okay, mRNA.
Moderna. All right, so this is in healthcare, and I did come out and say I like healthcare, but I don't like Moderna here. Certainly looks like we have a flag formation, which is bullish, and things were looking pretty good. PMO topped, which made sense. It was on a pullback, but now we're getting kind of a failed breakout here from that flag. And I don't like that. I do not like stochastics topping as they are. And if you're going to be in pharma, Moderna is showing a loss of relative strength within that industry group. And you want to be if you're going to be in a group, if you're going to be in a stock, let's find the ones that are outperforming their group. And certainly they should be outperforming the S&P. And Moderna is definitely not doing that. Certainly the group is doing well. So seeing the group do well and seeing Moderna not doing well, that tells you pretty much right out of the gate, you're not in a strong stock. If I owned it, let's see how far down would this stop level be. We're looking at about 4%, 4.25%. if you wanted to get below these lows here as a stop level. But honestly, I'm looking at this. I think it'll hit that stop level. I don't know that you need to wait around. I mean, a PMO sell signal, bad relative performance. I imagine that weekly chart looks pretty ugly here. Yeah, at the top of a trading range. Although the PMO is looking okay here, I bet it is decelerating. Well, not really. And it does look like a flag, but it's at the top of this trading channel. And again, we can see the weakness on the daily chart. So not anywhere I want to be right now.
AMGN.
All right, let's get into a biotech here. Another flaggish formation here, and it is holding this price island after the gap up, but PMO looking pretty ugly here. RSI is still positive. Stochastics are topping, and they didn't even get close to being above 80 this time. Notice also the relative strength against the group is starting to fail. So even though biotechs are starting to do well, Amgen not so much. This is what I was talking about within biotechs. Biotechs on their own can be doing great, but you really need to find those stocks that have the relative strength to go with it. So you can see back here, the group starting to do really well. And right here, Amgen started to do better than the market. It was doing better than its group. And that kind of set it up here for that nice move to the upside. Right now, it's not setting up. The relative strength doesn't look good to me. I think that you could keep this if you owned it, but here is your support zone here at that gap. Be very, very careful.
It's a flag formation, but it's
still... I mean, it looks good, but...
You have to go against what the market is doing, and that is not good.
Right. And again, you know, I think the hint under the surface is this relative strength piece. So, I mean, if you're gonna be in something, if you want to get into something, the relative strength just isn't there. And I suppose you could even make a case, Dad, for a flat bottom declining tops here, which would be a bearish descending triangle. And that would also tell you to expect a breakdown.
NCLH.
Right. Cruise lines. Well, it may not be so rounded, but this sure looks toppy to me. The PMO is in decline. Let me get the thumbnail on here. I should default to that. Excuse me. Again, relative strength. If you want to be in a cruise line, if you want to be in something in recreational services, you don't want this one because the relative strength is failing here against the group in a big way. And look at how the group is really starting to perform here, and Norwegian just really failing across the board. Failing in that it's not breaking out, it's moving sideways. RSI is about as neutral as you can get. PMO wants to maybe flatten, but overall it is in decline. It's suggesting that this level is not going to hold. So while it doesn't look rounded, it's certainly toppy.
Right. CLF.
Alan. I was going to say, I know somebody else who loves this particular stock, Cleveland Cliffs. All right, so reverse head and shoulders here. There's your head, there's your left shoulder, your right shoulder. Declining neckline, but notice it's just not been able to really confirm that pattern. It's just been moving sideways. Materials like we were looking at, they had been doing pretty well. They don't look horrible, but they're overbought, and gold is starting to fail, and gold does hold a lot of leadership within the materials sector. Relative strength's okay. The group's certainly doing well, and steel, this just isn't the best performer. It's certainly an okay performer within that group. Stochastics are above 80. I mean, this one, you really want to watch for that breakout. I would need that confirmation. This would be too early for me to enter. But it does there is some hope, if you will. The Silver Cross is just coming in with the 20 moving above the 50-day EMA. But we do have strong overhead resistance, even if it gets above this level. And notice how strong this level of resistance is. It's matching up with those lows back here in September and August. It's breaking out, trying to. I would just be really careful. Again, I'm sorry that I'm coming across as negative across the board today, but ultimately, the trend and condition of the market is the most important overreaching thing. That's why we do the decision point alert. That is the cornerstone. That is the newsletter that you should all be getting, because that's going to tell you what those conditions in the market are. That's going to tell you where everything is kind of landing. And the overall market trend and condition is going to affect pretty much most stocks in the market. So knowing that the trend and condition of the market is weak, we have to be really careful if we're going to enter. And if we're going to enter something here, I always like confirmation. Sometimes I wait too long for confirmation. But in this market right now, I think you definitely want to wait for confirmation. You need a breakout here. If you own it, I suspect you could certainly hold it. These are the levels that you really don't want to see. So that would mean a stop. Ooh, that's like 12, 8%. This is a really dangerous one. Maybe a 4% stop here to get you to these tops. But I know your upside potential is pretty high. So 16, 26% to get to this level. Don't get too greedy. I think that would be my call right here for Cleveland Cliffs.
Really, if the market is trending down, it's likely that 90% of stocks are also trending down, 8, maybe even more. So going against the trend and the condition is just deadly. Okay, KIE.
Okay, and before I get there, we are bouncing off some very, very strong support here. So you can make a case that we're going to see higher prices. Certainly that weekly PMO looking good, but notice RSI turning down before even reaching positive territory on the weekly chart. I think confirmation is necessary. KIE, the insurance ETF. All right, pulling back to support and so far holding it. Overbought PMO turning, don't have the sell signal yet. Stochastics are back below 80. This looks like a possible failure in the making. It doesn't look horrible, but it's certainly, if I own this, I would be tightening up that stop to just below that 20-day EMA. Notice it's really been able to hold mostly above that level since mid-October, and we needed to hold that level. It wasn't deadly back here, but the market was in a much different place at the end of October than it is currently right now. Be careful. I'm not personally, I always tell my exposure to our newsletter subscribers, and I am only 10% exposed. I do not have any intention to expand that exposure right now until I see the market trend and condition start to improve. And we don't have that yet. So be really careful. I can see why you'd want to enter, but this PMO, that just looks deadly. That does not look healthy. And the loss of support there for the stochastics, everything's looking so toppy right now, Dad. I don't know.
Okay. We have a question here. ENPH versus MAXN.
All right. This or that is what I call this particular segment. All right. Nice breakout here for Enphase. I actually do like renewable energy right now. You can see the PMO bottoming above the signal line for Enphase. And it is starting to show some relative strength against the group. This is what we're going to be wanting right here, is to see the relative strength and see where it is for each of these. And right now, this one is starting to show some relative strength. It's been doing fairly well against the S&P. It's breaking out to new relative highs. So all of that looks pretty good for N phase, but let's look at max N also in renewable energy. Notice this is okay, I don't even need to look at relative strength, guys. This is a rounded top, and we've talked a lot about those today. There seem to be a lot out there, Dad. PMO is topping as well. I mean, I don't even think you need to make the comparison on relative strength, but we can do it. And you can see that it is starting to turn lower against the group. Notice stochastics really have been failing here. PMO topping. If you're looking at this or that, I would certainly be going with this, which was N phase of those two. I think those look, N phase actually looks pretty good. Let me put it in here. I want to see it again. Yeah, look at the difference. I mean, there's no comparison to me. We're looking at a breakout to new highs on N phase, and we're seeing max N really starting to fail.
Okay, we're getting close to the end here.
Ooh, 1 minute.
Yeah, we have a question. What technical patterns would help predict when and if gold and gold miners would break from the overall market and move up in a bear market for stocks? Does Bitcoin factor into the equation? Just generally speaking, we need to look for a rising trend. That's it. That's what we're looking for. And I've said for quite some time that I believe cryptos, the interest in crypto has been detracting from gold, and it's with the recent breakdowns, I think we're seeing a nice advance in gold start, but that's what we're looking for.
That's it. And gold miners pulling back, still really good participation here, but overbought, and the Silver Cross Index looking toppy. All right, that's all we have right now. So we do have to shut it down. Alan, I saw you were raising your hand, but we're closing it down. Thank you all for attending the Decision Point Trading Room. The recording will be on YouTube at about 3 p.m. Eastern, so you can look for those if you can't attend. And with that, we will say good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.